How to invest $1,000 in 2025, beginner friendly. Investing can feel intimidating if you're just starting, especially with a modest amount like $1,000. But 2025 is a great time to start, and even a small investment can grow into something substantial over time. This guide is designed for beginners who want to make smart, informed decisions about investing $1,000 this year. Table of contents. Why invest $1,000? Understanding the basics of investing, setting your financial goals. Risk tolerance, what it means and why it matters. Types of investments. Suitable for beginners. Step-by-step guide to investing $1,000. Where to open your investment account. Top beginner-friendly investment options in 2025. How to build a diversified portfolio with $1,000. Common mistakes to avoid when investing $1,000. How to track and manage your investments. The power of compound interest over time, tax implications of investing, additional tips for growing your investment beyond $1,000. Conclusion and next steps. 1. Why invest $1,000? Investing is one of the most effective ways to grow your money over time, beating inflation and helping you build wealth. Even $1,000 can be the seed for future financial security. Beat inflation. Simply saving money in a bank may not keep up with inflation, which means your money loses buying power. Start building wealth. Early investments benefit from time and compound interest. Learn valuable skills. Investing teaches you about money management and financial markets. Access to opportunities. Investing opens doors to various financial instruments that can multiply your money. 2. Understanding the basics of investing. Before you invest, it's important to understand the key concepts: stocks, shares of ownership in a company; bonds, loans you give to companies or governments that pay interest; mutual funds, pooled money from investors managed by professionals; ETFs, exchange-traded funds, like mutual funds but traded on stock exchanges; diversification, spreading your money across different investments to reduce risk; risk versus reward, higher potential returns usually come with higher risk; liquidity, how easily you can sell your investment and get cash; compound interest, interest earned on your initial investment plus the accumulated interest. 3. Setting your financial goals. Before investing, ask yourself, why am I investing? Retirement, buying a house, financial independence, etc. What is my timeline? Short term, 1 to 3 years. Medium term, 3 to 10 years. Long term, 10 plus years. How much risk am I willing to take? Having clear goals helps you choose the right investments. 4th, risk tolerance, what it means and why it matters. Risk tolerance is how comfortable you are with the possibility of losing money in the short term for potential gains in the long term. High risk tolerance, can handle market fluctuations, may invest in stocks or crypto. Low risk tolerance, prefers safer investments like bonds or savings accounts. Your risk tolerance should align with your goals and time horizon. 5. Types of investments. Suitable for beginners. Here are some beginner-friendly investment types. 5.1 Stocks, buying shares in companies. Stocks can offer high returns but are volatile. 5.2 Bonds, loans to governments or companies. Safer than stocks but usually lower returns. 5.3 ETFs and mutual funds. Allow you to invest in many stocks or bonds at once, reducing risk. 5.4 Robo-advisors. Automated platforms that create and manage portfolios for you based on your risk profile. 5.5 Real estate crowdfunding, invest in real estate projects with small amounts. 5.6 Cryptocurrency, highly volatile digital assets, suitable only for those with high risk tolerance. 6th, step-by-step guide to investing $1,000. Step 1. Pay off high-interest debt. Before investing, clear any credit card or high-interest debts. Step 2. Build an emergency fund. Have 3 to 6 months of expenses saved in a liquid account. Step 3. Choose an investment account. Options include brokerage accounts, IRAs, or robo-advisors. Step 4. Decide your investment mix. Split your $1,000 according to your goals and risk tolerance. Step 5. Make your investment by shares, ETFs, or fund your robo-advisor portfolio. Step 6. Monitor and rebalance. Check your portfolio regularly and adjust as needed. 7. Where to open your investment account. 7.1. Online brokerage accounts. Examples: Fidelity, Charles Schwab, E-Trade, Robinhood. 7.2. Robo-advisors. Examples: Betterment, Wealthfront, M1 Finance. 7.3. Retirement accounts. Examples: IRA, Roth IRA. 8. Top beginner-friendly investment options in 2025. 8.1. Index funds and ETFs. Low cost, diversified, and easy to buy. 8.2. Fractional shares. Allows buying portions of expensive stocks with small amounts. 8.3. High-yield savings accounts. Great for emergency funds or short-term goals. 8.4. Cryptocurrency. If you're willing to take risk, consider small amounts in major coins. 9. How to build a diversified portfolio with $1,000, 50% in stock, ETFs, 30% in bond ETFs, or bond funds, 10% in cash or savings, 10% in alternative investments, crypto, REITs. 10. Common mistakes to avoid. When investing $1,000, investing without a plan, ignoring fees and expenses, chasing hot stocks or trends, trying to time the market, not diversifying. 11. How to track and manage your investments. Use apps like Personal Capital, Mint, or brokerage platforms. Review quarterly or annually. Rebalance based on goals and market changes. 12. The power of compound interest. Over time investing early lets your money grow exponentially over decades. 13. Tax implications of investing. Understand capital gains tax. Utilize tax-advantaged accounts. Keep records for tax filing. 14. Additional tips for growing your investment beyond $1,000. Keep adding regularly. Reinvest dividends. Stay educated. 15th, conclusion and next steps. Start today with what you have, stay consistent, and watch your money grow. Bonus tips for 2025. Watch for inflation-protected investments. In 2025, inflation remains a concern. Consider adding Treasury inflation-protected securities, TIPS ETFs, or real asset funds to your portfolio if you want some inflation hedging. Stay updated on tax law changes. Tax laws around investments can change. Use tax-advantaged accounts when possible and stay informed on deductions or credits available. Summary: the best way to invest $1,000 in 2025, beginner-friendly. Start by building an emergency fund if you don't have one. Define your goals and risk tolerance. Use tax-advantaged accounts like Roth IRAs if applicable. Diversify with low-cost ETFs, index funds, or robo-advisors. Use fractional shares to invest in big companies. Avoid high fees and risky speculative investments. Consider dollar-cost averaging if investing regularly. Stay patient and keep learning. With just $1,000, you can begin a smart investment journey that grows over time, setting the stage for financial freedom and peace of mind.